After a tumultuous 2022, we're in the last quarter of 2023, and with that comes crypto Twitter's favorite month, often memed as Uptober. It remains to be seen if October will actually be a green month for crypto, but between the upcoming Bitcoin halving and the multiple spot BTC ETFs set to be approved, we may have another perfect storm for crypto on the horizon. The cyclical nature of Bitcoin is not new information and is something we have been tracking at the Defiant for years. Nothing is ever guaranteed in these markets, but the list of reasons to be optimistic about Web3 and DeFi continues to grow. So let's recap some of what has occurred since our "You Are Not Ready for the Bear" film, because you're definitely not ready for the bull. SummerFi allows you to become a DeFi superhero. More on them later. Okay, let's talk about bear market things. 2022 was nothing short of a disaster for many investors. In tune with all previous crypto cycles, it is often the average retail participant who is the first to get wrecked. And just like so many portfolios, interest in the crypto market as a whole follows suit. The catastrophic collapse and subsequent bankruptcies of FTX, Three Arrows Capital, and more were enough to flush out retail investors and over-leveraged traders alike. Seasoned crypto veterans, retail investors, major celebrities, and even branches of the US government were all caught in the crossfire of FTX and Alameda's failure. The widespread fallout prompted public demand for new safety measures to be put in place for investors, and thus began a regulation by enforcement campaign from the SEC. Despite almost 2 years of sell pressure and reasons to be bearish, nature remains healing, especially when it comes to markets. The unravelings of FTX and 3AC are not total losses after all. Their fall from grace may not have come without a cost, but the arrests of Sam Bankman-Fried, Caroline Ellison, Su Zhu, and others involved are largely healthy for the space and enable us to continue forward with fewer bad actors in positions of power. The Bitcoin halving occurs every 4 years and is when the reward for Bitcoin miners is cut in half. Many view the halving as the official kickstart to bull markets in crypto. With the next halving expected to occur in roughly 6 months, this catalyst for Bitcoin appears to be converging with a few other fundamentally bullish factors that may drive a positive narrative amongst investors. When both fundamentals and technicals come together around a narrative, we tend to see sparks begin to fly in Web3. There's so much to look forward to than just the halving itself, which we'll get into in just a second, but first let's hear a quick word from SummerFi.
Market problems got you down? Get your DeFi superpowers with Summer.fi. Summer.fi is a platform for decentralized finance, founded by DeFi OGs, with thousands of people managing over $2.3 billion in crypto capital. It can be used to borrow stablecoins against your favorite cryptocurrencies, increase exposure against them using functionalities like Multiply, and earn a long-term competitive yield. Everything while protecting your strategy with automations like the stop-loss feature. This can be done across multiple layers and protocols like Maker, Aave, and Optimism, all in one place. It's the best time now to become a superhero.
Despite the SEC's ongoing efforts to seemingly stunt growth within the crypto markets, they appear to be fighting an uphill battle. The US judicial system has ruled against the SEC in multiple court cases just this year, including the lawsuits against Ripple and Grayscale Trust, both of which bode well for crypto adoption and development within the United States. Many experts consider the Bitcoin ETF approvals to be a formality at this point, regardless of the SEC's most recent delay, with BlackRock, Fidelity, ARK, and Grayscale all leading the charge. Unlike a BTC futures ETF, which trades a derivative, a spot ETF will result in ease of acquisition of actual Bitcoin for retail participants, which is expected to help drive prices upwards. And what about rates? In the past couple of years, the Federal Reserve has been on a tear, aggressively raising interest rates to tackle the post-COVID inflation. The pace at which interest rates have increased from 2022 to 2023 is the most rapid ascent observed in recent history. Between the 2 years, we have seen an increase of 4.88 percentage points in total. Although, here's a silver lining. Recent projections of the Federal Open Market Committee paint an optimistic 2024, forecasting rate cuts. Historically, reductions in interest rates have generally had a favorable impact on the financial markets. As they say, history rarely repeats, but often it rhymes, which seems to be manifesting itself slowly but surely in front of us today. The state of the world economy is always something to be considered and can certainly have adverse effects on the crypto markets, but it is getting difficult to ignore all the potential catalysts for the growth of Bitcoin and DeFi on the horizon. Thank you for watching and stay defiant.